All right then, welcome back. Let's take a look at how the markets have been performing today. It's a bit of a mixed picture out in Asia. Yes, the tech stocks were back in the liking, but not too much so, as we see some of the Shanghai Composite and the Hang Seng going to negative territory by close of trade, even though we had seen some of those like Alibaba, like Tencent perhaps do very well. Of course, yesterday was Singles Day out in Asia, so we did see a whole host of sales happen and come through. $74 billion worth is how much we saw come through for Singles Day. It was 11 days of sales then that happened out in the Asian region. Of course, Singles Day is started to be even bigger than Black Friday and Cyber Monday as well. So it certainly is quite interesting out on that front. Negativity across the board then for the Asian market region. Perhaps a little bit of exhaustion for the market, having seen it gain quite prodigiously over the last couple of weeks or so then as well. In a couple of days, should I say. More than 0.5% loss for the DAX in Germany and the CAC 40 as well out in France. Negativity as well for the all shares, more than 1/3% weaker today. That has taken on a lead from the resource counters, which have fallen off 1.5%. A similar fall as well for financials, having seen the banking stocks take a 0.7% hit. As we noted, those resources going down, a big fall for platinum miners as well as gold shares also. So those two have gone down quite a lot as well. The listed property market, well, that's slightly down, or should I say more than slightly down. 5% fall, in fact, today. Industrials, the only green by the seams of things, nearly 1% to the good. Speaking of industrials, Process and Naspers have gone up today. Process going up more than 6% at present, 6.27% to be exact. It's at 1,650 Rand a share there for that one. Omnia and Barloworld following suit, all in the black as well. The property counters, as noted over here, falling more than 5%, are indeed the biggest losers across the board today. More than 13.5% lost for Growth Point, the biggest of those property counters. High Prop, also another property counter, going down 8.3%. Diversified Groups, Super Group there, going down 7.33%, with Redefine, another property group, getting hit nearly 6.5% today. So not good news at all for the property counters. Onto the commodities board then, positivity across most of these as well. $43.90 a barrel for Brent crude. Some positivity coming through as well for platinum, as some demand kits to seep into the market. Not enough to write home about, but at least enough to head it above that $871 a fine ounce mark. Exactly $1,000 more is the price of gold. And onto the currencies then, slight better stance for the local currency against the US dollar. Seeing it in red means that the local currency has done better, but there's weakness for the dollar at present. So it's 0.25% weaker is the dollar against the local currency. So we're faring a little bit better. 15 Rand 58 against the US dollar there. As you can tell, the opposite is true on this front, as it keeps vacillating between that mark. So a pretty much flat stance for a euro, 18.40 against the euro there, while a quid will set you back 20 Rand 52 cents. Gerbrand Smith from NEFG joins us now as we get to unpack this market picture a little bit. Gerbrand, thank you so much for the time. So the tech stocks get an absolute beating and a hammering on one day. Today, they just come back into favor. I thought there would have been perhaps a sustained sort of decline from the tech shares, but they're still very important to this market, aren't they?
Yeah, look, there's some of these tech stocks that are driven by earnings, and earnings are what drives share prices higher over time. So I don't think everybody in the tech space is overpriced. There's lots of them that doesn't even make profits and are at ridiculous PE multiples, etc. But if we just talk about Tencent, for instance, they had regulation out in China on Tuesday and got hammered over the last 2 days, but came out with its third quarter numbers this morning, which is seriously looking excellent. Gaming revenue is up by 61%. Their total revenue up by 29% year on year. So certainly people were staying at home, playing games and playing more games, and that is benefiting a company like Naspers and Tencent today.
Yeah, $74 billion as well for Singles Day. So that means Alibaba certainly enjoyed a positive uptick as well, as what is the biggest event on the selling calendar effectively tells you the state of that Chinese economy. And it looks like things are recovering quite well on that side.
Yeah, look, I don't think anybody ever doubted some of these tech stocks' business models. They're doing stuff right. We know Alibaba is, JD.com is, Amazon is, Tencent is, etc. Some of them are just too highly priced, and I think that is what's coming into question. And there will probably be some winners and losers. But if you take the whole bunch as a whole, I think that is why people are warning against tech stocks gotten expensive, because everything just ran with some of the better names, and you're going to see a bit of a fallout, I think, going forward, and you'll have winners and losers, but it's not the one-way bet anymore. But certainly the trend is online retail sales, especially first world countries. It's a bit more difficult in South Africa. The inroads are slower in emerging markets, so there is still space for other retailers on a global front. And a while back, probably, I think people saw no space for anybody going forward, except for Amazon and a few of the tech names. But certainly the numbers are coming out, which will probably bode well, but you'll probably see a bit of a seesaw going forward.
Yeah, all right. We'll see how things fare as well for Black Friday, because that will be quite interesting as well. Very quickly, Mediclinic coming out with interim results today. Revenue going down 7%, down 5% though in constant currency terms. Adjusted earnings before interest, tax, depreciation and amortization, that's down 32% as well, reflecting mostly fixed employee cost base as well. Operating profit down 54%. Is there a massive surprise in this number at all, the fact that things have gone so bad for Mediclinic?
Yeah, no, I don't think so. I think everybody probably expected that. South African hospitals were empty. Didn't actually even. They almost got to breaking even on the South African side. It just shows you that nobody went for selective surgeries and other medical emergencies. So, yeah, they had a terrible time in South Africa, but I think it's the worst time to report on. So COVID started, lockdown started somewhere end of March. These numbers are from March to September, so it's the worst 6 months, and I think that's why the shares are actually looking a bit better. But certainly in Switzerland, you could see some return to normality. Hopefully they won't get hit too badly with the second wave, but I think Switzerland handled the whole case much better, so Europe's hospitals are coping a bit better. In the Middle East with Abu Dhabi, the hospitals on that side was actually doing a bit better over the 6 months, so they actually had increases on margins, especially on selective surgery. So, I think it all depends on when you're going to get it. But I think over the last week or 2 or 3, we actually all saw what can happen if people believe that there can be an old normal again. And I think we will have an old normal again. And that's why some of these shares are just priced for depression and recessions and so forth. And you see some upside going forward.
We'll see where that upside does indeed come through. Very quickly, the local currency as well, 15 Rand 50 odd against the US dollar. Is that a mark of stability now that we are below 16 Rand, or is there perhaps a little more volatility on the way?
Yeah, look, it's very difficult of our political stance to actually say yes or no on that question. But yeah, there's lots of volatility. I think the South African Rand is the second most volatile in the world, so nobody can call it. It's still on a purchasing parity basis. It is still too soft. It should probably get stronger, more to the 14 Rand 50 side. So don't get afraid if you actually see 14 Rand in a month or two's time. There's a bit of positivity around. If that continues, then you might see a stronger currency. But yeah, I think long-term wise, you should get closer to the PPP number. That's what most fund managers do use, and that's around 14.50 to be in the middle, and it always overshoots. So it's not impossible to actually go back to 13 or 12 Rand, but I'm not going to say that too loud.
Yeah, we'll see how things fare there. Gerbrand, thank you so much for the time. Appreciate it then. Gerbrand Smith joining us this Thursday afternoon here on SABC News as we get to grips with the market picture. The JSE sitting slightly lower today, not enjoying any good spirits on the real.